Welcome, ladies and gentlemen. Third day of the PDAC 2019 here in Toronto. And with me here is now Gianni Kovacevic, investor and author. And I would name him one of the top copper experts, of course, in the world, maybe the copper emperor. But let's talk about copper. Gianni, welcome this morning.
Nice to see you, Jochen. I see you all over the world. We have many friends in common. And we've talked about this particular theme, about copper. And what I want to talk about today is energy, global energy, as we enter 2019, 2020, in my view, is literally going through a hinge of history. And that's what we're going to talk about today.
Okay, then let's dive into it. Copper, what is the hinge of history? Is it e-mobility? Is it efficiency? What is it?
Basically, in a word, it's electrification. So if you look at global energy, which is the biggest industry in the world, oil is the dominant commodity. The global trade of oil is in excess of $2 trillion. The global trade of copper in a year is about 150 billion. So oil is 15 times more important to the global economy. But where's copper used? Copper is used in the generation, transfer, and utilization of electrical energy. 75% of all the copper that's fabricated today goes into those components. The other 25% would go into piping and plumbing and roofs and different art and applications like that. So as we speak, only 19% of final energy usage globally is electrification. And that's been a pretty static figure. Even though energy has grown over the past decades, it's had about a 20% role. But in the next 30 years, because of electric buses, electric cars, electric everything, final energy as electrification goes to 50%.
Wow.
Think of the magnitude
3 times more
of that statement. So in my view, I believe the CAGR growth rate for copper is going to be strong for the next 20 or 30 years. Now, we'll talk about substitution, aluminum, or other things later in the talk. And the price of copper, in my view, because of engineering and the lack of exploration success for high-grade deposits, we found lots of low-grade, not high-grade. So the enabler to make the engineering possible is a price that's significantly higher than today's price. Strong demand. It should be a higher price, which means that the value, and of course this is a forecast, I'm being a little bit on the ridiculous side, but the value for copper could go up by 4 or 5x to the global economy in the next 20 or 30 years,
so
which
like
means
$12 to $15 per pound. That's
not that, because the demand doubles and the price doubles. Then you get a 4x differential for the total value. And I know it's a pretty broad statement, but what I'm trying to articulate to your audience is that you want to follow copper for the next 20 years. And it's going to become a more important story for everyone that follows global energy. And that comes to a head right now, because next week is the greatest gathering of energy minds in the world. It happens in Houston, Texas, with Dan Yergin at Sarah Week. Last year, the main theme was electrification. But did you know the word copper wasn't mentioned? Think about this. All the CEOs, all the brainpower in global energy, they acknowledge that that's happening, and it's happening in real time. And in corporate time, the next 10 or 20 years is tomorrow. You need to start doing that succession planning immediately. They don't even acknowledge the word copper. Crazy. And that's a fantastic opportunity for every investor. Never invest in the story on page 1. That's the efficient market. But invest in the story on page 16, headed to page 1.
Do they think it's built out of love and air, or how should it work?
It's just there. It's
What's
abundant.
the thinking?
Oil comes from 4,700,000 individual wells all over the world. Many people have an interest in the oil trade. But copper's a little different. 25 mines give us 50% of primary copper. And there are 15 CEOs that basically produce this copper. So very few people make those decisions. And if you look at it, who wants high copper prices? Nobody. No fabricator, no people that process it, only the miners. So it's really these 20 people against the world. I'm being a little facetious, but it really is that way. And until there's a deficit, no one cares. They just assume it will be there. But they will compete. Fabricators, which right now we have the China trade war, and it was nervous. You go back to June. I don't care who you are. If you're Pirelli and you're making electrical cable, you probably bought a little bit less copper until this thing gets resolved. And you're going, what they say, hand to mouth. But eventually you get back to the business cycle. Even with tariffs, you still get back to the business cycle.
Of course you have to, because otherwise
and
you
what
don't build
happens
anything.
when it changes? All these fabricators, all these buyers of copper, they all go to the buy door on the same day. The problem is the speculators. They then have to buy over the people that hypothecate copper. They go long or they go short, and it exacerbates the price. Happened 2003, 4, 5. If you told someone that copper was going to go from 80 cents to $4, they would have slapped you in the face. That's exactly what happened.
Same situation now.
And they were terrified, miners and fabricators, because they thought society as a whole could not absorb even a 200% increase in the copper price. I'm talking when it was 80 cents. It went to $5 or $4.50 a pound. We've paid $3 a pound for copper the last 13, 14 years. So when the copper price, in my view, goes from $3 a pound today to $4.50 or $5, industry, society as a whole, they will easily absorb this. We don't have to worry about substitution, in my view.
Yeah, absolutely. I see it the same way. How would you rate the importance now of the upcoming e-mobility, I would call it? Yeah, because it looked to me like we had not the availability in the market so far with good models, with a lot of range. Yeah,
true.
But it looks like now, since this year, 40 new models come in the market. Next year, I think it's 80 to 100. And this moves on until 2025. All the car makers are then in the market. But those cars have to be built. And the average is what, 60, 70 kilograms is the difference of copper, of more copper usage?
Exactly.
Yeah.
That's correct. We had a big announcement. You're German. We speak German. We go there. You live there. I go there all the time. And last Friday was a very important announcement. It was Daimler and BMW have basically capitulated. They are merging their car-sharing platforms globally.
Wow.
And they're going to basically have this offering so you can go to the airport in Los Angeles with a car sharing, go to Frankfurt, rent a Mercedes S-Class, drive to Munich, park it, spend the weekend, get an X5, go to Kitzbühel, globally. Wow. And this is
That's a huge
game changer because they know there are tens of millions of young people that have never obtained a driver's license, or if they do, they use car sharing. They use Uber or they use the Car2Go platform. So this is going to come and it's going to upset the entire the way cars are procured, made, delivered to the public, the way we enjoy it as the public, because we are the consumer. If we don't buy these things, who are they making them for? Car sales are going to start falling globally. But the percentage share that's electrified is going to increase. So the amount of copper that goes into the auto trade actually goes up, even in falling car sales, because it takes 4 times more copper per car. Then they're going to take the human being out of the refueling of these cars. They're going to have countless hundreds of thousands of wireless inductive charging, where not every parking place, but many of them, you will simply park the car and it's charging. You never need to refuel it with a nozzle. So think of the infrastructure. So you have the car,
so wireless
then
charging,
we get this buildup of regular charging, high-speed charging, freeway charging, home charging, and now throughout society where you have this touchless, copper-intensive inductive charging. This is very robust for copper demand, and let alone all the renewable energies. When we're talking about wind power or solar power, these things take on average 500% more copper for each 1 megawatt that they build. So copper wins across the board. Whenever you take the emissions out of the energy mix, it means electricity, and that electricity requires more copper.
Wow. That's a big statement. So what is then your, let's say, prognosis for the copper price? Do you want to say something on that? Well, what's your feeling over the next years?
I'm going to look at it like an engineer. So I'm not going to forecast technically or like a speculator, but the engineers. So if you look at the 50 largest development projects in copper, if you take away the 4 or 5 highest grade ones, and I'm talking about Robert Friedland's Kamoa, Rick Van Nieuwhouse's Trilogy, which they've done a tremendous job. They've got high grade. The stuff in Serbia with Timok. But you know, everything else is pretty much below or at 0.5% copper. Lots of 0.4, lots of 0.3. That's not economic, Jochen, especially when you're going to an area that does not have a culture of copper mining because they don't have water, power, roads, communities to support these things. You have to build them. So as an engineer, a ton of that rock, 0.35 copper ore, for example, to make it economic, it has to be worth $40 a ton. So what that implies is we will see copper north of $10,000 a ton, or the old all-time high, $4.50 a pound, and probably $12,000 or $14,000 a ton. What the speculators do to the copper price in that environment where people that fabricate are buying above or have to buy above them, Elliott wave on copper, $7.50. It won't deserve to be there, but it's the speculators that exacerbate that window.
Push that on.
And that's why that's what they say. All we need to see is a floor on the copper price, and things get very interesting for all the investors that have looked at the space, and we love the optionality. And the people that follow your program know that I founded Copperbank. We did it 4 years ago. It works. 2 years ago, when the copper price moved 40%, our share price moved 400%. That works. But we have 3 development projects, all in the United States, all on private property, and there's no junior under 100 million market cap that has that kind of a portfolio. So we also offer exploration blue side, and we also have the optionality to take the economic studies on our projects, which after $3 a pound goes through copper, every 10 cents, we've got like $70 or $80 million of MPV value for every 10 cents the copper price goes higher. Now that's optionality, and that's what Copperbank is. So people that have followed it, keep looking.
Yeah, maybe one last word on your new book.
Yeah. Some people have read my book. It's a book that celebrates of many things, but also the role that copper plays throughout society, and about being an aware, contrarian investor. And going back to that Don Cox adage, we want to invest on those stories that are not on the cover of the newspaper. We want to go to the story on page 16, and when it's on the cover of Barron's or the Wall Street Journal or the New York Times, you become a seller.
Then you make the money.
Absolutely.
Exactly.
Successful investing requires everyone to agree with you later.
I love that. That was a super final sentence. Thank you very much, Gianni. Perfect as always, and we are also very positive on copper like you are. And yeah, let's see what happens.
Absolutely.
Thank you very much.
Thank you.
Yeah, ladies and gentlemen, that was Gianni Kovacevic, investor and author, and also his book, My Electrician Drives a Porsche. It's really worthwhile reading it. And he's super bullish on copper, as we are also. He said already $7.50 might be a possibility.
Elliott wave.
Per pound, by Elliott wave. Even I came to the conclusion by a pointed figure that $5 to $6 is absolutely possible. And he's right. You have to be early, and then everybody has to agree later on, because then you make the big money. So check out Copperbank. Thanks for watching us. Bye-bye from Toronto.